Hey, good morning, everybody. It's Mike with smartoptiontrading.com. You can also catch me on Twitter at OptionsMike. Hope everybody's having a great start to June. It's been a great start in the markets as we're now at all-time highs as we go into the Fed this week. And, we're really getting into summer. So let's just start off like we always do. Let's go right into the spot. If you look at the S&P 500 here, you can see this very slow grind up in this trend. That little gold line there is the 8-day moving average. You can see every day we're kind of dipping down to it, bouncing off of it, and then pushing back to a new all-time high. Intraday, the action in the markets has not been great, but on the daily chart, we continue to push higher. We're at new all-time highs. You can see looking at RSI, we're not overbought. And the one thing that this sideways action on the SPY for the last, let's call it two months, right, has allowed is some of the moving averages to catch up. You notice the 200-day now pushing up to 377, and everything's starting to catch up. The 50-day caught up, and this is good for the markets. Markets don't like to really get stretched off the moving averages so much, and it was starting to get a little bit stretched there after that run since November. So we're looking good here on the SPY as we go forward. Do I expect to see some games? Yeah, we're going to have the Fed this week. We could get a tantrum. End of June is notoriously a tough month trading time. Typically, we see some downward action or some downward pressure on the markets. But overall, I think the markets are fine and that dips should continue to be bought. Let's move forward now. Let's move to the Qs. And this is where it kind of gets interesting because I've been talking to you guys about the Qs for a couple months that, we haven't been leading. The Qs have been trailing. We formed this cup and handle pattern. The handle went further down than it really should have, but it finally broke to the upside. And guess what? Yesterday, after a long time waiting, we finally put a new all-time high in as the market is starting to see rotation. What is rotation? That is rotation from sectors that were in play to new sectors. And when you look what's going on, let's just go to our next chart. You can see here the sectors that were leading since November and the inflation plays are coming off fast. For what it's worth, the financials are getting killed. You can see here on the XLF, almost back to the 50-day, some of the strongest names, JP Morgan, Goldman Sachs, they've already breached the 50-day. They've been weaker already, showing weakness there. We've seen names like Caterpillar and Deere, two of the stronger names during the last couple of months. They're getting wrecked here, big volume selling in it. So we're seeing a change here in market behavior. And that's okay. With the markets now saying that it was worried about inflation, now it's like, well, we think inflation is mostly going to be manageable. And that's kind of important to us because a little bit of inflation is good for the markets. A lot of inflation fast is very bad for the markets. Specifically, it's bad for tech. And that's why we're starting to see this rotation back into tech. Names like Apple and Facebook and NVIDIA, all-time highs, they're really going strong. And the name that really is perking up here as of yesterday, if we go to our next chart, is Apple. Been watching Apple for months, right? And everybody's been saying, what's wrong with Apple? What's wrong with Apple? Nothing was wrong with Apple. Apple ran a ton on a stock split that gave it no additional value. It decided to pull back, finding its way. It held the 200-day here for months, right? You can see that green line. We came down, we touched it a couple times, we held it. And then yesterday, you can see we had a good volume day. They were buying options all over this thing. They started with the weekly 127s to the 128s, the 130s. We saw them buying out into next week's 135 calls, 132.50s. You pick it, they were all over Apple yesterday. A lot of that call buying has stuck to open interest going into today. You can see this beautiful candle on volume. Retook the 50-day. We haven't done that in a long time, right? You can see how weak we've been. And for me, the next move now is up to that 135 area. Why 135? If you look on the chart, that's the area we struggled with. You can see we built a wall back there in April. We couldn't break through. We couldn't find any strength into it. So that's what I'm looking for. So if this market's going to be strong for the next week, we'll look for Apple to push up to the 135 area, and we'll see where we can go from there. This is Mike with smartoptiontrading.com. I hope everybody's having a great month.